You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. Bill, we're going to have a look at three of your selections today. Let's start with gold.
Well, gold is historically, and this with the system here we're looking at, and that encompasses breakouts. And what I've done here, and a lot of people like these breakouts, and also encompasses the moving average system, which the moving average is at the bottom. It's a traffic light system. When it's green, you go. When it's amber, you stop. And when it's red, you sell. And that's generally the gist of it. Now, gold took off, as you can see, the GLD. This is the market vector on gold in America, which tracks roughly the gold price. And you can see what a fantastic gain that was from September, 5th of September 07, when it was about 67 or 670. Bucks, and it went up to 940. Well, that's where the stop came in. Those are the two vertical lines on the left-hand side. That sort of depicts that move. It's supported by the weekly IFT RSI, which when it's above 0.9, it does support that trend. So you might have got in a bit late, but it does show you where the trend is now. As it's gone along here, the big thick red line going across the chart there is the 200-day moving average. So that signal is always above the 200-day moving average, which is very, very useful. And the green on the chart actually tells you where the new high has been hit and where the actual trend is kicking in. At the moment, this is the most important part now, at the moment it's above its 200-day moving average, which is very important for anything you're trading at the moment, is to know where the 200-day moving average is. The point is that if it's very low, as it was in October, the chances are that it will revert to mean. It will probably come back up again. And if it's very, very high, like it was in February 2008, it's probably going to come back down again. So it's useful as a marker as to where you are to the 200-day moving average. Its reversion to mean is one of the things that actually it does affect the market and the trader's mentality. So this at the moment is below its 50-day moving average, but above its 200-day. I think technically oversold, although in a negative state. I think gold, with its the Ultra Index being, and that's the bottom indicator there, suggesting that the volatility has dropped right out of the market here, that we could see an uptick in gold. I don't see that anything really changed here. Although it does say red, I'm a holder of gold above the 850 level, certainly, and with a target, I would say over 1,000 plus. So it's tracking sideways, and this is like any system at all. When you're tracking sideways, it's hardest, and that's where we are now. In the trend zone, which if you remember where it was back in September 2007, it's easiest. And this is why it's easier to make money in a trending market, albeit up. The bias I think I have for it is up, rather than in a sideways market. It's been mushy in that sense since, really. So a positive bias I would spin on that one.
Okay, Bill, that's gold. Thanks for looking at that.
Mm-hmm.
Now, coal you want to have a look at.
Yeah, coal is easier. Now, Giles, it's easier to have something which has gone to extremes. We looked at before. When things go to extremes, it's easier to play. And this one here, easy peasy. When that red line, when the red at the bottom, the red bar the bar at the bottom goes red, you know the moving average is turned down, supported by a 60-day low, which is the arrow coming through. The vertical line on the left-hand side suggests that the weekly IFT or the RSI has started to weaken. So all those pointers there suggesting that it's going to come down. And that's when you would more or less get out of that situation. On the 24th of July at about 47, there's no one's going to say, well, you shouldn't have got 45, 46 or something. And that's the sort of zone for getting out. But now, having had a red and yellow zone, we've got more green coming through, and it's supported by a 60-day high. And this is the market vector for coal, which is ETF, which is tradable on the American markets, and tracks 39 odd companies in the coal index. In the coal industry. So we're seeing a pattern here of that turning up. Now, I wouldn't say go mad on that one, but I think that certainly it's going to go towards its 200-day moving average, which again is the red line on the chart there. So it's about 22, 23, I would expect that to go to. The actual market now is sort of is supported by the inverse Fisher. That's turning up as well. The traffic light system at the bottom, the moving average system has turned up. Volatility is low. I like buying into volatility, which is high. You can see that at the bottom, it's turned very low. So again, this is clearer. As I say, this is a buy now, or certainly look to buy coal companies now for recovery up towards the 22, 23 zone.
Thank you very much for that, Bill. And finally, RSX.
RSX is the solution market. which tracks again in an ETF market vector on the Russian market, and you can see again very, very similar to that of the coal market in the sense that it's very clear to say this is a sell on the 20th of June '08 at about 57. That's when you got the inverse Fisher weekly turning lower from the 0.9 level, turning off, and then you've got the little red line after that. Beneath that indicates suggesting we've got a stop coming in, and then you look at the bottom there. Again, if you haven't missed those points there, it goes red, suggesting the moving averages are turning against you. Should go out within that. So you could actually go short on the market there if you wanted to at 40 and trade it all the way down, and that went down to 10. So there's some good gains in that. But since then it's been sort of sideways and tracking nowhere, and only recently, March, April time, has this index started looking stronger. Now, it may be resource-driven, and I think, well, more than what's actually going on in Russia at the moment, more than the technicals. There's still some banking problems there, of course, and the growth, although it's been interrupted for 10 years, first time we've had an interruption in 10 years, is yet to resume. This is maybe resource-driven, and I think we'll see that further gains from here, certainly to the 22 level, which I think, looking at 60 to 70% gains on this one, I'm looking for this year on this ETF, and that's what I'm looking for up to the 200-day moving average, and then I'd reconsider position. That's the technique. Look for the 200-day. If it's below it, run it to it if it can do it, with a tight stop beneath it if it goes below 15, with a view to taking a profit or reviewing situations at around the 22, 23 level where the 200-day is.
Bill, thank you very much for all that. We will chat again next week. And by the way, I know your copper, which we were talking about last week, has been doing very well. So congratulations on that. Thanks for the recommendations, and we'll talk again next week.
Look forward to that, Charles. Thanks.